Howdy there, folks. Welcome into the 5-piece. 5 little videos for me to react to here today. First one up here is this little minute video about my number one biggest stock, and we're going to find out what are they in trouble. So great. Now my number one and my number two stock are in trouble. Jeez. Okay. Second video I want to react to is this little 1 minute clip here. BlackRock CEO, one of the most powerful men certainly in finance. BlackRock CEO think U.S. won't see hard or soft landing in 2024. Okay, that's interesting. That's maybe a different view than a lot of people have. Then I want to react to this little 2 minute clip from Jamie Dimon here today, calling central banks 100% dead wrong on forecasts. So is he saying there's about to be a big problem here? So we'll hear from him. I'll react to that, kind of give my opinions and perspectives. Ray Dalio, 1 minute clip to react to. Dalio says he's pessimistic about the global economy in 2024. That does not come as a surprise, but we'll react to that. I'll share my opinions. And then the chart master is going to tell us the bull stocks, the bull traps, I should say, to avoid right now in the stock market. So yeah, I'd be interested to hear his points and share my perspective more from a fundamental perspective. So appreciate everybody joining me as always. Thanks so much for being here, folks. Thank you for being subscribed. New all-time high subscribers in the history of the channel. Also, make sure you guys join me over on Twitch. I will be live streaming all these earnings this week over there. That will be pinned comment if you want to follow me on there. Today after the bell, we got Microsoft, Google, McDougal, and Visa all reporting. So I will be covering that, plus Texas Instruments, which a big customer of theirs is Apple. And then obviously tomorrow Meta, and then the next day we'll be covering Amazon and Phase live on Twitch. So that is a pinned comment down there if you want to follow me. Alrighty guys, let's get into this.
Tell you about 33 attorneys general from across the United States are now suing Meta for allegedly endangering young users and profiting off the data harvested from them. The suit also alleging that Meta knows its platforms are addictive to its users, but that it does not disclose that fact. Remember, this follows a 2021 probe into Meta from several state AGs alleging that the company promoted Instagram to children despite knowing of potential harms it could have on their mental and physical.
Wait just a minute. Hold your flippin' flapjack and horses for just a minute. Hold your horses for just a minute, okay? You know what else is addictive? I don't know, eating potato chips? I don't know, going to McDonald's? Playing video games? Watching TV? Watching Netflix? Playing chess? Like, so many things in this world are addictive, but they're addictive to different people, right? I might be addicted to watching YouTube. I probably watch too much YouTube every day, okay? Are you kidding me? Depending upon the person, there's a million things that are super addictive to them, and those people engage in them every single day. And so, the fact that Meta has to be like, oh, our product's addictive. What about everybody else that their product, everybody that has a successful business, pretty much, you have probably a pretty addictive product, especially if it's in the media space, right? Oh man, I don't know. It is what it is, but let's go a little further here.
Health. Meta telling us for its part in a statement, we share the Attorney General's commitment to providing teens with safe, positive experiences online and have already introduced over 30 tools to support teens and their families. We are disappointed that instead of working productively with the companies across the industry to create clear, age-appropriate standards for the many apps teens use, the attorneys general have chosen this path. Carl, they're apparently...
What about TikTok? Is TikTok not the most addictive thing supposedly on the internet right now? What about TikTok? What are we going to do about TikTok?
A number of...
Because last time I checked, we haven't done anything about TikTok.
Including civil penalties. Meta stock right now not reacting too much. It's off the highs of the day, but it is still higher. Keep in mind, it's also up more than 200% since last October and will report earnings this week.
Ridiculous. Ridiculous. Next up.
A government, I'm talking about the U.S. now, that in 2000 we had an $8 trillion deficit. And today we have a $33 trillion deficit. So the deficit's grown by more than $1 trillion each year over the last 23 years.
And also, where are the parents? You knew I was going to come back to this. Where are the parents at? You know what I mean? If you don't want your kids using, Instagram, don't have them use Instagram. If you don't want to have them watch 6 hours of Netflix a day, don't have them watch 6 hours of Netflix a day. If you don't want to have them use TikTok, don't have them use TikTok. Once again, it goes back to the parents. That
is highly inflationary. The balance sheet of the Federal Reserve
all right, hold on.
Is highly...
I was having trouble concentrating.
A government, I'm talking about the U.S. now, that in 2000 we had an $8 trillion deficit. And today we have a $33 trillion deficit. So the deficit's grown by more than $1 trillion each year over the last 23 years. That is highly inflationary. The balance sheet of the Federal Reserve is highly inflationary. And so all these different measures are much more structural, much more difficult. So as a result of that, interest rates are going to remain higher. Opportunities for investors are going to be able to be very patient. You could do nothing and enjoy a positive return.
All right. So are you expecting a hard landing or a soft landing in the United States, or you just can't project?
We will not see a hard or a soft landing in 2024. The amount of fiscal stimulus that is just entering the economy, which is very inflationary. The CHIPS Act, the IRA, and the Infrastructure Act, about $970 billion. The largest peacetime, non-pandemic moment of fiscal stimulus. At the same time, our central bank is trying to arrest the economy. And so that's just hitting the J curve.
That's a good way of putting it.
And you see in labor settlements right now what's going on in labor talk, 25% increases in wages. So I don't see a problem, but I do believe the Federal Reserve is going to have to raise rates higher, which probably will mean by 25 we may have a soft, we may have a hard landing. That is the only way I see how we're going to be arresting this. But I don't expect it anytime soon. I think the power of the economy, the power of the consumer that Jamie about a lot, is giving me comfort that the economy is fine.
Okay, so let's be very clear about what that man just said. Outside of, he doesn't expect basically a hard or soft landing, so no recession basically in 2024, okay? The other component that I thought was very important is he basically said inflation is going to continue to be a problem. Without saying it, he's basically said it, right? He was talking about all the money coming in from the government side and on the fiscal side and everything like that, right? And talking about it's all inflationary and talking about, expect rates to be higher for longer and those sorts of things. So, yeah, it's a potential. It's one of my 4 scenarios that I laid out in a video on the main channel, I think last week. I laid out the 4 different scenarios for us in 2024. And that is one of the scenarios. So, and that scenario comes with risk as well, right? That is a scenario that maybe holds back small caps a little bit, potentially, we'll see. It is a scenario which, money is still being fought away from dividend stocks and into savings accounts and into treasuries. So these are just things to consider. And he could potentially be right about that, right? All right, Jamie Dimon, he might have a little bit of a different opinion. Calls central banks 100% dead wrong on forecasts.
Look at the situation as complex as we've seen. I don't know if it's 1948 or 1938. Obviously, we all hope it goes away. I think it's a little bit of wishful thinking. It's going to take real leadership on the part of many people out there.
That's crazy.
And then I look at the financial situation, the fiscal spending, which is more than it's ever. I'm talking about the United States, but it's almost true around the world. It's more than it's ever been in peacetime by a long shot, with the highest debt levels we ever had by government. And there's this kind of omnipotent feeling that central banks and governments can manage through all this stuff. I'm cautious. I don't think it makes a piece of difference whether rates go up 25 basis points or more. Like zero, none, nada. I think whether the whole curve goes up 100 basis points, I urge people, be prepared for it. I don't know if it's going to happen. But I look at what we're seeing today more like the 70s. A lot of spending, a lot of it's going to be wasted. I'm in favor of this whole ESG effort. On the other hand, if you look at the way we're going about it, it's almost like governments want to whack them all and force it, but no carbon taxes, no rational way to go about it. That would be more important. In the United States, for example, you can't build pipelines to reduce coal emissions. You can't get the permits to build solar and wind and things like that. So we better get our act together. I'm hopeful when I listen to...
So when you hear Jamie Dimon talk, right? When you hear Jamie Dimon talk, this is why a lot of people, let's call it from the finance circle, that know Jamie Dimon, right? And keep in mind, Jamie Dimon isn't known by like 99% of the population, so he'd never win. But from people in finance, a lot of people would love him to be the president of the United States because you hear the man talk. He's very practical. He has more experience in business and certainly in the finance world than anybody out there pretty much in the world, right? He's done a tremendous job, obviously, leading JP Morgan to success over time. And he would certainly be the most successful president we ever had in office, right? There's no one even remotely close to him that's ever been a president in terms of what they accomplished before they got in office, outside of the political field, right? Not even remotely close to him. So, yeah, I could definitely understand why a lot of people would love him to be president. Will he ever be president? Probably not. Not in this day and age. This day and age, it's all about who has fame, who has a big name, unfortunately, and it seems like that's not really going away. And it seems like if you don't have already a big name before you get into that election, it just seems like you're going to struggle. I hope that changes over time, because just because you're famous doesn't mean you're going to be a great president. Okay, just bottom line with that, right? Because otherwise we might have, Kim Kardashian versus Kanye West someday. That might be our presidents, and it would be Kylie Jenner versus, Taylor Swift. That will be our presidential options.
The R&D,
We'll see.
around the world, we will make the breakthroughs we need to beat climate, but it's going to be a day later and longer than it should be because of our own basic incompetence. I also want to add one last thing. I'm taking this from Bob Gates. To fix this, it's going to take real leadership from the Western world, in particular America, but leadership which is not just military, diplomatic, development finance. And this development finance, I don't know if Ajay is still here, what we need in development finance dwarfs what governments can do. So it can't be done without private capital, and private capital, isn't going to come in if they, you build something that gets taken from a government or something like that. So we have a lot of work to do. It's one of the reasons I think these events are positive, but I would be quite concerned. And the other thing about when you look at economics, I think people prepare for possibilities and probabilities, not calling one course of action, since I've never seen anyone call it. I want to point out that central banks 18 months ago were 100% dead wrong. Okay, so maybe there should be humility about financial forecasting. I would be quite cautious about what might happen next year.
Yeah, very well put. And, if you remember what I'm looking forward to getting in this Ray Dalio one, right? If you remember, what was everybody saying? What was every economist saying that was going to happen in 2023? Almost every single economist out there said, we're going into recession in 2023, right? We just haven't seen it. And so that's what all the economists believed. That's what a lot of even business leaders believed. And that's honestly even what the stock market believed. Look at how much stocks got pounded last year, right? Even the stock market was convinced, recession. And then it just didn't come to fruition. And people have just been amazed, wow, the economy's held up better than we thought it was going to hold up, right? But you got to keep in mind, and I explained this to everybody before we actually went through the rate hike cycle, and there was starting to be talk about we're going to go through a rate hike cycle, right? I look back at history, and the United States has done pretty well as an economy with 5% rates in the past, many times. The thought that the whole U.S. economy needs 0% interest rates all the time to be successful is just an unrealistic view. We can survive with higher rates, okay? Eventually, we'll have problems. Eventually the Fed will have to cut rates. That's eventually going to happen, right? But if you go back in history, we've had long time periods where the Fed was raising rates, kept rates in a more elevated place, and us being at 0% interest rates, there was only a thing really after the great financial crisis and for that time period coming out of there, right? Usually that's not the situation. That's actually the situation you should be like, that's not normal, that should not happen, okay? Alrighty, next one up here. Ray Dalio is pessimistic about the global economy in 2024.
Optimistic about the global economy or pessimistic?
Pessimistic.
Pessimistic.
Pessimistic about the... Look, you have a political, you have a monetary, you have a conflict type of environment. At the same time, you have the greatest inventiveness. We talk about this fabulous technology development that has so much potential to produce wonderful things, and then it could be a problem. So if you take the time horizon, the monetary policies that we're going to see and so on will have greater effects on the world. And you look at the world gaps, so it's difficult to be optimistic on that. And I think that now the real issue, I think, is how we deal with each other. Okay? It was said earlier very well, peace. If we can keep the peace, if we can have a healthy, competitive environment without having a war with each other, we will be in good shape. We will make adaptations.
So, Ray Dalio, pessimistic on the economy, and I look forward to getting into this one, stocks we should avoid that are bull traps. Ray Dalio, pessimistic about the economy in 2024. Now, does that come as a surprise to me? And the answer would be no, that does not come as a surprise. Why does that not come as a surprise to me that Ray Dalio is pessimistic about the economy in 2024? The reason being is, if you've listened to Ray Dalio talk for the past several years, to be quite frank, the man's spoken a pessimistic tone pretty much every single time you ever listen to the man for years now at this point in time. You go back and you watch interviews with him for the past several years. He's talked in a very pessimistic tone. He doesn't sound bullish. He doesn't sound optimistic. So just keep that in mind. And he's never really been like a perma bear, but I will say over the past few years, specifically, he's starting to come across as a perma bear, just to be honest, okay? And it doesn't mean he's got to be wrong. It's just, you got to keep in mind, he's been negative for years now. Years. This is not like, oh, Ray Dalio's just taking this stance and he's pessimistic about. No, this man's been pretty negative when you watch his interviews for years now, okay? So that's just some food for thought in regards to that one, right? Alrighty, next one, the chart master. Bull trap stocks we should avoid.
So, well, as distinct from value traps, which of course are weak stocks that are so tempting, they're cheap, and they end up being traps. A bull trap, and we'll look at some examples, is something that's been very strong, and yet the strength was a trap. It draws money in, it looks as though it's finally broken out, and it only reverses hard. So we're going to look at 4 or 5 examples, and then one that I think is a prospective bull trap. So if we go to the charts, we'll start with an ETF. And the first one here is the ITB, the home construction. This is now down almost 20%, but it's a textbook example of something that's strong. Remember, the market has yet to make a new high, right? Go back to its, and it tries to break out, draws in capital, and it's a trap. It reverses hard, down again 20%. Look at another ETF, another sector or theme. Look at XLI.
Yeah, from a fundamental perspective, I wouldn't be surprised if the home building space is maybe a little bit of a trap. I think, I just think housing starts are not going to be super strong in the fall and especially into the winter. And if mortgage rates stay up at 8% or so, I think it could be weaker for longer. So, yeah, I wouldn't be surprised if that's kind of a bull trap or whatever you want to call it.
It's the same thing. Now, it looks, again, people are positioned, it's going, it's making...
Because a lot of the housing stocks look cheap. If you look at a PE ratio, you look at a PE ratio on the home builders, look at a forward PE ratio, a lot of people say, hey, it looks pretty cheap. Yeah, but that's if their business holds up. What happens if their earnings go down 30% next year, right? Or 40%? What happens if it's weak in 2025 as well? Well, then you're actually paying a much more significant. That's where you get into the whole value trap of like, I thought I was buying a really cheap stock. Then their earnings started to fall apart. And this stock is not as cheap as I thought. Good example of that is Foot Locker, right? Foot Locker stock I personally own. It's been nothing but a value trap so far, where it looked really cheap when I was buying it on a PE ratio, but then their earnings start to fall apart, and then all of a sudden they got to do all this restructuring and things like that, and then they're not nearly as profitable as you thought they were going to be right now, right? And so that's a good example of a value trap, and there's a million examples I give you. I've been involved in plenty of value traps over the past 15 years. I'll get caught into more value traps in the next 15 years. You want to try to avoid those the best way you can, but still sometimes you're going to get trapped in thinking, oh, the stock's so cheap. And then you're like, wait, what happened to the earnings? It's not cheap after all. And it's a painful process to go through.
It's leading. There is no recession. The market can't make a high, but it is. And it only reverses. Now it's down some 11%. Let's go to a stock or two. The biggest one of all, Apple. Apple broke out. It had a lot of price target raises, upgrades. And yet it's down 13%, a classic bull trap. Or something completely different. Look at an alcohol.
Yeah, and is Apple a bull trap going forward? It's really tough to say. I would say I would lead maybe a little bit more toward a bull trap. When it comes to Apple, we're all waiting on the iPhone numbers, right? But we can't just see this quarter, because we know all the time that first month or two, you always get the huge Apple fans that always want the newest iPhone to always buy, right? So we're really going to start to see in December, and then certainly as we go into the late winter time and the springtime, what is the true demand for this iPhone 15? That's when we're going to really find out the truth around Apple, right?
Words like Constellation Brands. I'm trying to be eclectic in the choice to make the point that it's a circumstance that has no regard for market cap or type of business. It makes the high, it breaks out, draws in, and then it reverses. Finally, look at even different, yet again, cruise ships. Royal Caribbean's down 30%. And yet on a technical basis, one could have made the case it's a textbook breakout. And so bull traps are
yeah, on the fundamental side, Royal Caribbean, I think it's a pretty decent stock. I do like CCL better. I think CCL has more upside if I had to guess over the next 2 to 3 years. By the way, I have no money invested in Royal Caribbean or CCL right now. But yeah, if I had to play one, you're telling me you got to go buy, $50,000 of one of these stocks, I would put it in CCL. But yeah, I think those stocks could perform really well. They look cheap, which is one of those scary things, but the good news for those companies is they actually have incredible demand, and it doesn't really matter what happens out there. They should continue to have tremendous demand. The cruise guys,
they're treacherous. Let's look at NVIDIA.
Especially with the baby boomer generation, a lot of those folks retiring now, cruise ships are going to boom for the next 10 to 20 years.
A big stock that has broken out, and the risk here is that this, too, is a trap, that this is adored, it's loved, and it is perhaps, and I think this is the right, if you're long, you got to hedge, and or just buy some puts and play for a speculative break. It looks like it has all the elements of a prospective bull trap.
You know what else I was just thinking about? CCL, RCL, some of those stocks are seen as like, you don't want to be in those stocks right now. Interest rates are really high. Those companies have big debt, things like that. But I could also flip that around and say, well, guess what? It's going to be a lot harder for other competitors or potential competitors to build ships right now. These ships cost hundreds of millions of dollars, sometimes $1 billion. In this interest rate environment, I don't know how many people are going to be able to build those ships and get that sort of funding if you have an unproven business model, right?
Carter, may I ask you, in terms of the other examples of bull traps that have snared people, did you think that they looked like that they were going to reverse hard, or did it look so textbook in terms of the breakout that there was a moment in time where you thought, you know what, this could be it for these stocks?
So interestingly, happily, we did not publish on a single one of those names as a prospective breakout. And that wasn't necessarily great insight, a little bit of luck, a little bit of insight, but here's what it was. When all those stocks were breaking out, there were so many things that weren't confirming it. Banks and biotech and the Chinese market and so many things that were struggling. It felt like a trap. And so we specifically did not publish on any breakout candidates over the past 3-4 months for that very reason.
Interesting, and you guys know my feeling on TA, not my thing, man, not my thing at all. I appreciate everybody joining me for today's video. As always, I got to get ready to, I'll release this video, and then I got to hop on live stream for Twitch and cover all these earnings after the bell. We got some of the biggest companies in the world reporting today, tomorrow, and the next day. So appreciate everybody. Much love as always. Thanks for being subscribed, and have a great day.